Hello and welcome to another edition of Digital Dialogues from Maritime Gateway. Today we have a guest with us, Mr. Shailesh Garg, Director, Drury India. As you all might know, Drury is globally renowned independent maritime research consultancy which has been offering maritime insights and advisory services. And Shailesh Garg has been with Drury for almost 20 years with a vast experience of 25 years into ports, shipping and logistics sector. He has been involved with a lot of uh, due diligence, consultancy and also traffic studies with various organizations. His experience is undertaking commercial due diligence, strategic analysis and worked on a number of consultancies which included assignments for ports, both in India and internationally, and financial institutions, PE funds, port operators, and logistics players. Welcome to the show, Mr. Shailesh. Thank you for joining us today.
Thank you, Mr. Ram Prasad. This is pleasure joining you. Thanks for inviting me for this session, and as always, pleasure talking to you and looking forward to this discussion, as it is always helpful to know what's happening and you ask the relevant questions. So it also pushes us to think about things which are relevant for the industry in the changing market dynamics. Yeah.
Okay. Let me begin this conversation with a simple question. How is the current container market situation globally as well as in India? Because as you know, container market is like a seesaw kind of thing. Starting from the COVID, we have seen a lot of volatility in pricing. So how is it currently and what do you see for the next quarter, things changing?
So overall market, the sentiments are bearish, as to put it in a very simple and straightforward. So the volumes have been and the demand side has been quite sluggish. The port throughputs, if you say global numbers, we are not looking more than 1% growth in 2023 over 22. So that's the kind of numbers we're looking, and probably things may change for worse in the coming times with the new numbers coming in. So that's the overall picture. But there and the major markets which we are looking at the decline is North America and Europe. These are the two major big markets which we are not seeing the growth because of the economic scenarios and the subdued demand and inflationary trends. But there are some bright spots like subcontinent particularly. And when we talk of India, I think first half we have seen total port throughput increasing by around 6% year on year. So that's good to know that when entire world we are looking at 1%, we are still at 6 plus growth in the first half. But then some of the headwinds are there. We are looking at that exports are on a decline, and like for last quite I think 4 to 5 months, we are seeing that our export numbers are on a declining trend, and imports are also not increasing the way it should be. So overall trade scenario is not very positive. So let's see how it goes in the second half. We are also seeing, because we are seeing this subdued demand in Europe and America, which are the key markets for some of our products. So again, that impact would come on the growth of the volumes. And we are also facing some competition in key sectors like textile. So what I have been reading and talking to people is that we are facing a big challenge competing with countries like Bangladesh, Vietnam on textile front and yarns and other things. So I've heard and read that some of the units in Tirupur, which is a hub, are closing down, or the production is quite low compared to last year. So those kind of challenges are also coming in, and therefore the overall scenario is again for the second half is going to be challenging, I would guess, for India per se. And whatever happens in India, I think that would be the scenario for the subcontinent, because even Sri Lanka, the overall volumes are not growing much. There's some improvement in the gateway. So that's the scenario we think. So hopefully we can hold on, then probably we'll end up around 5% growth year on year in India.
So holiday season is also not going to lift up the demand?
It has not to the extent it was expected. We are already we are coming close to the holiday season in Europe. So now after that, we don't see the expectation is that it will not be. And although shipping lines are expecting some improvement in the demand side, and therefore the freight rates showing some improvement. But even that, probably we see that will not help us to grow beyond 1% compared to last year.
Okay.
So that's our take. And as I said, there are some headwinds which we are thinking probably if they come true, then probably numbers can be much lower.
So we see a lot of carrier capacity continues to be building up everywhere. I mean, on the shipping lines, and especially when you look at Asia-Europe trade, more capacities we are seeing. So, what is your perspective of this increasing carrier capacity? How will it impact on the pricing or the region?
Definitely, this supply pressure would add to the sluggishness in the demand. So this is already showing we have seen significant fall in freight rates in 2023, and this is likely to continue in 24 also, as per our own estimates and Drewry. So we think that the overall average rates which we take for all the 3 or 4 key routes probably will come down by 60% in 2023 and probably another 25-30% in 24. And the reasons are simple, as we just discussed. One is the demand side. The growth is much lower than what the capacity increase would be. In terms of total fleet, we are expecting a growth of around 5 to 6%. And this is just the fleet. Then there is a combination of other factors which we term as operational capacity. So that is also going to see further increase. So on and on, we see that the supply is going to increase much faster than what we are looking at the demand side. Second, we were expecting some more aggressive demolitions, especially when the freight rates were under pressure. I think that was the logical thing to do, that to get rid of some of the tonnage and try to keep the balance under manageable limits. But till now, we have not seen that number coming in. So the expected demolitions have not happened. Now, probably one of the reason is that all these shipping lines are sitting on huge cash and the balance sheet is strong. So probably they are able to sustain. So maybe till the time they see real pressure coming there, they will stick on to what they're trying to do now. And the third part is that some of these new buildings, and actually if you see the large portion and percentage of the new orders are aimed at new technologies, new fuel. So that is also kind of putting pressure on this new building because people want to comply with IMO regulations. And so most of these new buildings now are being talked about alternative fuels and the biofuels. And therefore, that is also driving the new order. So definitely what you said is right, that this will add pressure, and we'll definitely see this being reflected in the lower freight rates in the coming times. And already we are seeing that Asia, Europe is quite close to their break-even numbers as per our own estimates already. So probably adding new capacity would further put them in pressure. We expect shipping lines to show more discipline, which till now I think is not being seen as what was expected. So we may see more blank sailings, we may see more idling and slow steaming to manage these capacities to the extent possible to absorb these new capacities coming in.
You mentioned about IMO regulations and green fuels.
Yes.
So there is an apprehension in the industry that there's a lot of cost involved in meeting the IMO regulations and switching over to green fuels.
Yes.
So ultimately, can we look at a scenario where freight charges are more and then the burden is passed on to the end consumer?
At some point, it will have to be done because so probably yes, you can. This could push up the freight rates as of now, but definitely your margins could be under pressure. So maybe you will only try to cover as much as possible, and you can compete for. So to that extent, shipping lines will be willing to pass on this to or looking forward to pass on this to customers. But I would not expect that they will try to build a kind of profit margin on this till the time they are in situations to go kind of dominate the negotiations with the BCOs and other things. So in the given scenario, I think best scenario would be if they can pass on as much as possible to the customers, and definitely that would put pressure. And there have been some calculations done by Drewry also. I think that white paper is out in the market. So we have done some calculation to show that what impact it can bring in if you compare some of the new fuels which we are talking, definitely that's going to increase the cost. So some shipping lines may choose to just do slow steaming if that works out well for them to absorb their new capacities, but yeah, not always easy option to do that.
Let us look at ports and terminals. Like
Yes.
in India, the government is very keen to bring in a lot of private investment into terminals. We have seen even the landlord boards also giving away the terminals to private operators and all that. So,
Yes.
how do you see the scenario? Are these concessional agreements or the policy are more congenial now to the private investment? What do you see?
Yes, I think over the last few years, I think government has taken right steps to make it more transparent and market driven and take out some of the ambiguity in the concession, especially related to the major port trust tariff setting mechanism. So I think that has become more closer to the market side, and so definitely that has helped for the new bidders to come in. But at the same time, we are looking at there are some new capacities being talked about. Probably one has to look at their feasibility in terms of commercial feasibility, whether we are trying to cannibalize into each other. So I think that problem still remains to great extent where there are too many projects competing for the same cargo. So probably that's where the idea is, but I think from the government perspective, that's something for the bidders to look for. So that's one part of the issue. Second, I think there is still a discrepancy where we are seeing more of these state governments, state boards going for 30 plus 20-year concessions now. Even we are talking of GMB where the new projects are being talked about 50 and other locations also. And if we are talking of mega projects where we are talking of huge capacities to be built in, I think that gives a kind of a comfort to the investors to look for a long-term investment and a continuity in the business. So probably maybe we have to look into that whether that's feasible to look how we can do that and give that kind of confidence to a bidder which is looking to invest for a long term, because what we have seen 30 years is still a long period, but then in last 8 to 10 years the investments dry out because the bidder is not sure what will happen, whether they will get the will be able to win back the concession or not, and therefore they just don't want to invest more money in the project till the time they have that clarity. So typically they are just looking to do whatever best they can do in the 15, 20 years time, maybe first 10 years to be honest, practically first 10 to 15 years. So that long term perspective always helps, I would guess. So that could be one area which we can look into and see how feasible it is, whether it is all out 50 years or we can have an option of 30 plus 20, which probably you have an option if operator is not doing whatever is expected, then you have an option of exit, but at least they can negotiate and take it forward.
During post-COVID scenario, a lot of industry or trade analysts started talking about China plus one theory, and India could really benefit out of it and all
Yes.
that.
Yes.
But in reality, when we look at it, Indian exports are not doing great. Sometimes they are going up, and sometimes they are. If you look at the first half of 2023, they are not very promising.
Yes.
So, what is your take on this China plus one theory? Can really India take advantage of this, or what actually is going wrong, or what is going right?
Yeah, so definitely this China plus one theory is something what most of the companies and organizations are trying to follow, and India should and could benefit from that, and we have made some efforts towards this direction. But I think this is a very short period. Like we were in COVID scenario for 2 years till 21, and then we are just in first half of 23. So shifting of supply bases, supply chain is not easy. So it takes time, and India also needs to work on their own infrastructure policies and everything. So I think this is too short a time to judge whether we have succeeded or failed, but yeah, probably the window is short, so we need to really do things much faster than what we are doing now, and take advantage of this opportunity. So we are seeing some of that already happening. We are seeing in electronics like mobile phones and other things, companies looking to relocate or have facilities in India. We're looking for EV manufacturers looking in India. So yeah, definitely there is a kind of a traction towards shifting to India as an alternative manufacturing facility. But at the same time, as I said, there is a shifting cost and inertia and other things which we need to really see how best we can overcome those things. And therefore, we are seeing some of these shifts are happening in countries like Vietnam and other countries. So probably, but they are is too small, in my opinion, to take everything out from China. So that's where we stand. But yeah, as I said, next 2 3 years would be critical, and we really need to work on it. Even if you see recent G7 summit, where the head of states, they also mentioned about de-risking of the supply chains. So I think this is quite serious now, and they have understood from the past experience in 2 years that this is a big risk, and they're not talking about decoupling; they're saying de-risking. So it's not that they want to get out of China, but probably yeah, how to mitigate some of the risk which we faced in those 2 years. So yeah, it's a strategy which is going to be there, and we need to take advantage of that.
South Asia and Southeast Asia is a very interesting region for all of us. And India is also, I think, proactively trying to connect with improving the connectivity with the ports in nearby countries using Chittagong port or in Myanmar ports. Recently, we have seen a lot of connectivity improvements. So, how
Yes.
does this eventually take shape? Do you see more trade happening among South Asian countries or Southeast Asian countries?
Yes, I think there are two things. One is the proximity, so that makes us a natural partners for our neighboring countries. Second, improved infrastructure does help in reducing the time cost, everything for the logistics, whether it is road, rail, and shipping. So I think that is positive. And also, we are looking at the situations in our neighboring countries like Sri Lanka. We saw when they were going through this financial crisis, India came forward, and I'm sure other countries also. But so I think there is an opportunity to see how best we can now help and try to increase our cooperation on different things, including the trade. So I see a future that where the intra-regional trades would become a key, especially again, I am trying to link it from de-risking of the logistics chain. So if that is one of the ways to look at it, why not? Why India cannot be a supply base for neighboring countries if we have the capacity to do that? So from that perspective, also I think that makes sense. So yes, I do see, but I think the major hurdle has been in the past and currently also has been the political scenarios. So and some of the other issues. So we need to really see how best to overcome and kind of still work towards achieving what we are trying to do.
I am told the Vision port is expected to be commercially operation
Yes.
during the maybe the first half of 2024, and
Yes.
government of India is talking about maybe a couple of more transshipment ports. Maybe Vivo Chidambaram port is another one on the radar. So it has been a long cherished dream for India to have a strong transshipment hub, and we have seen Vallarpadam coming up a long time ago, but we haven't seen really transshipment picking up. So when all these hubs come up, what do you see, or what exactly are the right strategies for us to see transshipment happening here in India?
I think this strategy of having multiple transshipment hubs is slightly, in my opinion, not helping because, as I said, question you asked about the terminal development and that we may try to develop multiple facilities, which is fine, but then we should also be wary of that whether we are trying to cannibalize again volumes and underutilize the assets and not achieve the economies of scale. So I think that is the biggest challenge which we may face if we try to do too many things, too many ports trying to vie for the same cargo. So from my perspective, we should be careful about that. And ultimately, transshipment is a very price sensitive cargo and low margin business. So volumes and economies of scale is a key to that. So if we are not able to achieve it, then it will not succeed both financially and commercially. And we have competition from Colombo, no doubt. So they will keep doing what they are doing. And if we also try to build too many facilities competing for the same cargo, because our transshipment hubs will primarily be competing for subcontinent volumes only. That is how we are looking at the facility. There could be some interlining which they can get from outside. So I think that is the very important point which any new port development has to keep in mind, especially in transshipment business. As far as transshipment not succeeding in India, I think that is not correct completely, because we have seen how Mundra has developed partnership with shipping lines, and they have got a significant volume, if I would say, in transshipment compared to what we had earlier. So they have shown that it can happen, and shipping lines have shown that it can happen in India. So maybe we have to see what makes it work. So one is that how much volume you can attract. Second, maybe we are seeing that most of these new transshipment hubs are having a liner alliance, strategic partnership. So whether we are talking of King Abdullah or whether we are talking of three terminals in Abu Dhabi, all are liner affiliated. So probably that's the way to go. If you have to really make it happen and have a sustained business, then a partnership with the shipping lines will help. So that could be the strategy to be adopted.
I think in India also actively that liner partnerships are happening with terminals, right?
Yes, we have just seen in JNPT that's happening with JM Bakshi. So, and we Mundra have already MSC, NC, CGM. So that gives that kind of a base volume to start with. So, so I think that is one of the important criteria now for transshipment, where shipping lines want to use transshipment for reducing their network costs. So they would like to have, if they are the anchor customer, then probably they like to have the stake also. So we are seeing in Colombo also we have lines which are supporting terminals. So I think that is one area which we have not explored till now in some of these terminals which we are developing. So that would be another key success factors to look for.
But does it really help in overall growth in container volumes, or it is somebody else's gain and somebody else's loss? If the anchor liner moves away to another terminal in partnership, how does it work?
In totality, it may not add much to the volumes because in the region. So you are moving one cargo out of another port. So that's true, like large part may happen that way. But still you can win some cargo from outside the region. So probably you can get, as I said, interlining business as lines are, suppose you have a strategic partner and it has got operations at other ports. So they may try to realign some of their network and bring in the volumes to the new hub. So probably to that extent, additional volumes can come in. And third is that once you have a hub, you provide this direct connectivity of main lines, so you avoid feeding into the another hub. So that's a better liner connectivity which is providing to the hinterland cargo. So that may give slightly an advantage, and in terms of lower freight rates and transit times and other things. So that could generate more volumes in the hinterland or give them the competitive advantage to compete with their other competitors in the region. So to that extent, volumes can extend, but transshipment is basically moving cargo from one port to another. So from the gateway perspective, probably not, unless until that transshipment hub leads to development of, as I said, because of the improved liner connectivity. If you say, okay, I can develop a free zone, which could be used as a distribution hub, which we have seen in countries like Jebel Ali doing, or even I think the aim of ports like Abu Dhabi is that to use that and leverage that connectivity to develop the hinterland as a free zone distribution hub and all that. So if the transshipment hub can help in developing that, then that would bring in more volumes and additional volumes, which otherwise would not come, because then somebody can set up their business and say, okay, I've got connections to all the key markets, and I may come and use this as a hub for distribution. So I think that is another angle which one can think of to make this success.
When you look at the ports and terminal sector in India, how do you summarize the last 10 years, and what is your crystal gaze for the next decade?
If we are talking of only containers, then I think last 10 years have been really good. We have seen volumes growing significantly, and especially the transshipment coastal, we have seen a growth in coastal volumes and transshipment volumes at Mundra, definitely. So, but I think the growth has tapered in the last, just before COVID also, like 18, 19 was not such a great year. And then we had this bad phases of 20. So definitely that growth momentum has come to some halt, except the year 22 when the recovery happened. So now we have the base, we have the operators, we have the capacity, we have the infrastructure, and two things happening is that not only on the port side, we are developing our freight corridors, DFCs, and definitely improving the land side of the connectivity. We have this opportunity of people looking for China plus strategy. So I think there is huge potential to grow in next 10 years. Definitely, if we can play our cards well and use this opportunity to really build on it. So for me, this is an exciting time and a kind of a era where we can see another set of growth happening because of new infrastructure initiatives, policy initiatives we have taken, ease of doing business. So I think a lot of positives happening. So yeah, so but shipping is a global trade. We can't control everything. So what is happening in Europe and US probably is also impacting us. So hoping that things are not that bad. And yeah, so I would say positive and looking forward to it.
On that positive note, Shailesh, it's always a pleasure talking to you with a lot of insights into the container market, both in India and abroad. Thank you very much for joining us and sharing your valuable perspectives.
Thank you. Thank you. Pleasure is all mine. Thank you.